Hello, and welcome to the Remind podcast, the podcast where we get inside the real estate entrepreneur's mind. My name is Harrison Smith. I'm the Director of Growth with the Matei Group of Keller Williams Realty, based here in Maine and expanding throughout New England. And I'm joined today by Gregory Ferrari. How are you, Gregory?
I'm good. How are you?
Great. Thanks so much for joining us.
Of course.
So just to start off, why don't you tell people a little bit about yourself?
Well, I'm a mortgage broker here in Maine for Leader One Financial. And I'm also do a lot of short-term rentals and a couple long-term rentals, mostly in Maine, but I just recently moved here from Colorado, so I also have some rentals on the Western Slope, but all single family.
Okay, awesome. So likely didn't start in the real estate space because it seems like most people end up here. They don't start here. So why don't you tell us a little bit about how you got started in real estate and how you got to where you are now?
And mostly out of necessity. So I was in Denver. I owned restaurants and coffee shops. So I come from the hospitality world. So, they're high ego jobs. You feel really good about yourself owning restaurants and coffee shops, but in the end, you make very little money. So it was just a way of trying to figure out how to, use the connections that I made to actually bring home a livable income. And then got married, had a kid. So all of a sudden the need for me to actually make more money just kind of got really real because I was in my 30s. I was still making less than most of the dishwashers that worked for me while owning two restaurants, working 60 hours a week. So it was just time for a drastic change. So ended up selling my businesses, moving out to Maine, big life changes, and then got into mortgage brokering as a way of I had interest in real estate. I already had a couple rentals in Nebraska, and just trying to find a way to leverage those relationships that I've made, and then to quickly come to Maine and grow a rental portfolio. So getting into short-term rentals and long-term rentals right now.
Okay, so the draw to short-term rentals, is that your hospitality background, or do you just like that model?
I think it's right now I see a lot of value in single-family homes, especially if you can find single-family homes that aren't really attractive to people that want to live there. So I've found homes that are built on slab, don't have a basement, don't have a big yard, that sort of thing, where it lowers the value to someone that wants to live in it as a long-term home for themselves and their family. They can't see themselves having Christmas morning there, but you can make it a really nice short-term rental. People don't need ample closet space and a giant kitchen whenever they're going to stay there for 3 or 4 days. So I see a lot of value in those. And then my hospitality background just made it, really easy for me. So having the design background, having the ability to communicate with guests, and just understanding the review structure and everything just kind of made sense to me. So I think both things, the numbers and my background made it a really easy decision. Plus, you make a lot more money doing short-term rentals. And if you're trying to, really replace an income, if you have 3 or 4 short-term rentals, you're, halfway there.
Sure. So most of the Airbnb investors I talk with are looking for, lakefront, oceanfront. You've gone a totally different direction, kind of going after those homes that might not be the best fit for a family to live in and things like that. So is that something you would was that your plan all along? Had you planned to go down that road, or did that opportunity just show up and it made sense?
I think, there's just a lot more competition on those. And I don't want to get into a bidding war with anybody. So I think the value of it is really just the entry point is very, very easy. You're able to get in with I do a lot of these with partnerships, so we can get into that if you want, but it's like a 10% down loan where you can get sometimes almost a turnkey property, and you're putting in $40,000 for a property that might make you, $60,000 that year. So you're going to make a lot more money, obviously, if you're buying a, $700,000 lakefront property. But I could buy two $300,000 properties and make that same amount of money. So to me, it's all about the math and, what I think I can make out of a space. So I'm buying, I would call them interesting properties as a nice way of saying it.
Sure.
You know, uh, they might have 3 or 4 different types of flooring, or they might have, you know, uh, you know, I don't know, old asbestos tile in the living room and that sort of thing. So the things that are problems for other people, but I know that I can make, quick solutions, and inexpensive solutions to make them into a really nice Airbnb rental.
That's fascinating. It's a totally different way to do Airbnb. But so you mentioned the partnerships and the 10% down. So why don't you talk a little bit about the lending that you do, that 10% product, and then kind of your partnership structure?
Yeah, obviously, if I'm a party of it, I can't be the lender on it, but um, but I do a lot of these loans for people that want to get into either doing short-term rentals, but um, they actually do allow you to do a 10% down second home mortgage, as long as you occupy that home some of the year. And definitely, you know, check with your lender or your attorney to find out exactly what those regulations are. But as long as you're occupying it, or the person that's going to be on the loan is going to occupy it some of the year, then you can qualify for that 10% down loan. Then after 12 months, you can do whatever you want with that property. You can transfer it to an LLC if you want, sell it to an LLC if you want, or keep your stellar low interest rate for loan for 30 years if you want. So, and be able to use it year round as a rental, even make it into a long-term rental if that's what makes most sense for that property. So this gives you, a low barrier of entry into a property, while also, giving you a lot of flexibility after that 12 months. And a lot of people you see it on Bigger Pockets and other blogs like that of people that have been using these loans to get Airbnbs. It's just, you really have to understand, and your lender needs to understand what the regulations are.
Yeah. So with anything, the devil's in the details, right?
Exactly.
Gotcha. But it's a really interesting program that allows, to your point, somebody to get into an Airbnb, that maybe they do intend on using an Airbnb as an outlet to cover the cost,
Mm-hmm.
in a really affordable manner that I think a lot of people don't realize is available to them. Most of us
Yeah.
just think conventional financing, 25% down, that's a lot of money for a place that, you're trying to figure out a way to cover the cost of or use yourself. So that's a really fascinating product.
Yeah. Yeah. That's been the life-changing thing for me, is because I can take that, I'm in Maine, I'm next to these, I see these properties, I'm able to find them, see their potential, and I can go to partners, especially out-of-state partners, and say, this could be a property that makes, $80,000 gross, and you're able to get it for, with furnishing everything all in, you can be in for, $60,000 to $70,000. And so you're able to recoup almost all of your money in the first 12 months. And there's not many, 100% cash on cash investments out there. So that's usually how I structure my partnerships, is they're getting all of their money back before I take anything. So, and then at that point, they have all their money and we become 50-50 partners. So yeah, for the first year, it's not, I'm not making a lot of money, but to me, in 3-4 years, if I'm able to really scale this up, I'll be able to have a replacement income just from Airbnb rentals.
Gotcha. So are you actually managing the bookings and the guests in all these
Yeah.
properties?
Yeah, and a lot of people really think that's a difficult process, but I mean, I use Your Porter and I use Price Labs, which are, you know, very easy, intuitive programs that do most of the communication for me and do most of the pricing. So it's dynamic pricing. I always set mine like above 30% above what the expected is. So everyone's like, well, they price it low. It's like you can automatically set that to, you know, put your price on a curve that you're more comfortable with. So I'm having to do very little when it comes to the actual management of every property, except for the cleaning. So I don't do the cleaning, but managing cleaners is by far the hardest thing. So I've really updated all my properties. So there's not going to be very much maintenance at all unless someone actually breaks something, which hasn't happened yet. But the managing getting cleaners in there is the struggle. So that's something I'm going to hire out next year.
Yeah, that's great. That's
Yeah.
it's definitely the additional touch points of Airbnb certainly can make it a challenge.
Yeah. Yeah. If you're organized and you have systems, it's worth it. That's all I can say.
Yeah.
It's work, but not as much as you think.
Yeah, it makes sense. Okay.
Yeah.
So what most attracted you to also get into the lending space?
I mean, it's just the way my mind works. I think, I've always been really good at solving problems, so creative problem solving, and it's something that you do every day because there can be loans that are, you know, they're gonna fall apart,
Mhm.
but if you're able to come up with a creative solution, you're able to, with some people like save their purchase of their primary home or enable them to be able to become you know an investor whenever they didn't think it was possible. So having the ability to be like creative and was this kind of a natural fit to my personality. And I just wanted a job I could work from home. I've a lot of other things going on. We have my wife and I have a retail business, and we have a lot of a 3-year-old, and just being able to work from home and kind of set my own hours and decide how much money I want to make a year. That's what being a mortgage broker is. If you decide not to work that week, you just don't make any money. If you want to, you know, uh, really, put your mind to it, then there's people out there that are in this field. They're not even doing investment loans. They're just doing FHA loans all day. They can be making $300,000 to $400,000 a year doing that. So it is kind of however much you want to put into it is what you're going to get out of it. Which, as like a person that's always been an entrepreneur, it is a job. I do work for someone else, but I mostly work for myself. So that's the main thing that attracted me to it. And needing to make more money. I can't run coffee shops anymore. Yeah.
No, you've been there, done that, right?
Yeah. Yeah, time to be able to pay my own bills, that sort of thing.
You made a great point. I just want to elaborate on. So, the actions you take today, they don't change your income today, but they influence your income 30, 60, 90 days down the road. And it's a lesson that we harp on in the agency world with our
Hmm.
real estate agents is the fact that, you know, you don't feel like making calls today, you don't feel like going out with clients today. Okay. That doesn't necessarily hurt today. It feels okay today, but in 30, 60, 90 days when you don't have things closing, that's when you feel that impact. So really future you is impacted by the decisions of today you. So
Yeah.
try to do those things where future you will be thankful.
And I mean, with investing, it's not 30, 60, 90 days. It's 5,
Yeah.
10, 30 years. So that's where, we're really seeing the impact of things that we planned 3 to 4 years ago finally coming to fruition now, and just the financial weight of all the things that we've done. We've leveraged ourselves like crazy, and now I mean, you always get helped by. I mean, no one's a genius in real estate right now. Everyone just got really lucky with appreciation. Anyone that feels like, man, I'm a genius because look at all I have now. It's like, that was luck. You can't,
Yep.
time coronavirus and everyone all of a sudden being able to move to Maine and be a virtual worker, and all the things that have made Maine balloon like the way it has, or even, all across the country. But I was in the game, I leveraged myself. I put myself in a position to be successful. So that's, I didn't stand on the sidelines. I actually jumped in, which is something I've never had a problem with. But being able to just jump in and take risks is why I've been able to build what I have now.
Yeah, that's great. That's what it's all about, planting seeds, planting trees, and then
Yeah.
giving them time to grow so you can sit in the shade.
Yeah. Which is the plan.
Yeah, exactly. Exactly. That's what we're all looking for. So what would you say, as you look back, what would you say has been most important to your success? Is there a particular habit, trait, a mindset, a mentor? What's been most important to your success?
I mean, I think a lot of it is just my position, when I started. I've never had debt. Like, I had wonderful parents that put me in a really good position of, they didn't help me with a down payment. They didn't, pay my rent or anything after 18, but they, got me through college with zero debt.
Hmm.
And whenever I decided to start a coffee shop, or when I've decided to buy rental properties or homes, I knew that my worst case scenario in my life of messing up, I'm not going to be homeless. I'm going to just be on my parents' couch. So just having like that support's been, and because I do know a lot of people that are not in that position. I deal with a lot of people that are immigrants, especially in Maine. We have a pretty large immigrant population of people that are just starting to try to buy their first homes. And I just know that they're not in that position of if they do mess up, they're going to be in a worse place than I would ever be. So a lot of it is that, but also is just not overthinking it. Like, for better or worse, I've never overthought anything. And so far, that's been mostly positive. I can't say completely positive. I've had some businesses that haven't worked out, and I've had to pay some debts I didn't want to, and that sort of thing. But for the most part, anytime I've put myself out there and just taken a leap, I've been, I've been rewarded for that. So I think a lot of it is just not overthinking things and just getting into it, especially whenever the stakes are low. Like when people are looking at buying a house hack or something like that, where they're only going in at 3.5% with an FHA loan. And that one property can change your life. Like, that's the power of that one thing. If you get in something like that, in a year, you're having something that's making you $1,000 a month, or paying, not having a house payment when you're 25. And, I didn't do that. And I wish this knowledge was out there and it was available to me, but not the way it is now, not with YouTube and podcasts. And, it's just, there's so many more people in this world now, which is great. But, just, jumping in and making those decisions and being brave, especially whenever you're younger, that's what, makes people really successful.
Yeah, that's a great point. It's never been easier to learn these things. So, but you've got to learn it, but then also go do something with it. And that's the key, is being able to take that next step and go do something with it.
Yeah, if you read a million books but don't actually take action, uh, you know a lot about real estate investing, but you're not a real estate investor.
Yeah, exactly. That's a great point.
Yeah.
So along the lines of that, so what was the most difficult lesson you've learned along the way?
Um, I mean, a lot of it, I think, is just work-life balance. It's really easy to get obsessed, and we have, luckily we haven't been able to travel or anything like that for the last couple of years. So, that's been has made it easier to get obsessed and just kind of get really into investing, but, just making sure that I turn off and, uh, and don't, neglect my family. Because sometimes you just get so into it that, um, you're just not remembering that what you're working for. So to me, that's been the difficult thing, is just remembering I'm doing all this for the purpose of, providing, a future for my family. And sometimes I forget that, and it's not like I risk my family, but I definitely get a side eye. Uh, so just that's been the big thing for me, is just trying to, you know, work, not work less, but have hours, have time where it's just me, just my friends, just my family, and just turning off the real estate investor side of my brain. So that's been a little bit difficult.
Yeah, it's really easy when you get into momentum to get that tunnel vision, and just
Exactly.
that your mindset locks in, and you just go and look up, and time passes, and you just want to make sure you're enjoying what's passing by.
Yeah. And you remember why you're there in the first place.
Yep. No, that's great. So what's the one piece of advice you wish you had gotten when you started?
I mean, to start earlier would have been great. I mean, um, but I mean, if besides that, just like get started in your 20s, would have been, uh, I'd be in a lot better position than I am now. But it's, I guess, just like don't overanalyze. Like, you need to know what you're doing. You need to understand the numbers. But at a certain point, you're not going to get, that. I mean, a lot of the literature that we have out there is for a world that we're not in anymore.
Mhm.
Like, you can't walk the block, find a building, make an offer, and get a 12% return right now. That's just not the world we live in, and there's too many people. It's super saturated. There's nowhere else to really put money besides the stock market. So you're not going to get that, home run dream return. Most likely they exist, but most likely you're just not going to get that. And is it worth just having cash in the bank and continuing to look for that perfect deal? Or is it worth getting a couple singles, getting a couple doubles, and putting that together, and over time, being able to get equity and put yourself in a position where you can buy that home run property?
Yeah, I love that. It doesn't have to be a home run. You can pile up a bunch of singles and doubles, and you'll still score runs.
Exactly. Yeah.
So I
You can
love that.
still win, because that's really what this is. It is kind of, it's your life, but it's also a game. And if you're not, if you're not playing, if you're not swinging, you're not going to hit anything. So I don't even watch baseball, but but I have a lot of these metaphors.
The sports metaphors always work.
Yes, exactly.
Perfect. All right. So how do people get in touch with you if they want to learn more about you, talk more about Airbnb, understand more about the lending that you do?
Instagram is probably the best place. So I'm just Main Mortgage Broker. I don't know how I got that, but on Instagram, Main Mortgage Broker. And then if you want to get in touch with me for lending, it's Gregory Ferrari at leader1.com. It's LEADER, then the number 1.com.
Perfect. Well, I really appreciate you coming on, Gregory. It's been a great conversation.
Yeah. Thank you so much.